Hello everyone, welcome to another video on the SafuLane YouTube channel. In today's video, we are going to be talking about the SBI trading model. The SBI is just all about the sweep, break, and inducement. And I'm going to be showing you everything and how it works in this short video. So quickly, I'm going to use some infographics to explain the SBI model to you and also how it works. So the SBI model, let's quickly have it on my screen. Yeah, the sweep, break, and inducement. Break, inducements. Yeah, so the SBI entails what? The sweep, break, and inducement. That is the full meaning of the SBI. So when we are talking about the SBI, you've been thinking of it that, okay, what is this sweep, break, and inducement? Are you familiar with it? Yeah, it's something that most of you might be familiar about. You might have seen it in many places, but you don't know that it's called the SBI. So quickly, remember when we were talking about market structure, we were talking about strong highs and lows and all of that. Remember we talked about when we have a strong low, we want to see price pushing to the upside, sweeping liquidity and breaking structure to the upside. Now, when we have something like this, we already have what we call what? The sweep of liquidity because price swept the previous low. We have the sweep here. Then we can see, sorry, we have the sweep. Then we can see have the break structure at this point. Then that is what? The sweep and the break. Talking about the inducements, let me introduce something to it. Remember when we were talking about the algo structure and we were talking about points A, B, C? No, it's like this. Sorry. We said we have something like this, right? And we have this first point as our point A, points B, point C, and point D. We talked about that the point C is always a trap. Now, the point C is known as what? The inducement, right? Now, when we have this type of structure forming, we always want to see something of this nature. We want to see that price has already swept liquidity, right? Price has swept the previous low liquidity, and we always have it like this. So this is just what the SBI entails, where we have the sweep of liquidity at this point, we have the break of structure at this point, then we have the inducement in between, which is what? Your point C. Then all we want to see is we want to see that price will come down into the point to what? To mitigate your entry or coming back to your point A and taking out the point C before pushing to the upside. And that is what the SBI entails. And this is a scenario for an uptrend. When we are talking about the downtrend, we want to see something like this, right? Sweep of liquidity, break of structure, then an inducement, then price falls. So we have something like this. We have the sweep, we have the break at this point, then we have my inducements. So when you want to take entry, you can rather, there's always an order block at this point. If you can't find an order block, there's always what we call the break block, or you can call it the QMR. The QMR, Quasimodo reversal, is always like this. Then you have your entry below at this point, right? Then you want to sell from this point. And that is just the simple SBI model that we've been talking about for a while now for those that don't understand it. And that is how it works. So quickly, let's take a look at some chart examples and we see what the SBI entails. So at this point, you can see that we have price pushing. Look at this. We have sweep, a sweep at this point. We have a break because this is a structural point. We have a break of structure. Then we have what here? We have an inducement at this point. So you can be looking towards to have your entry from this particular point here and looking to what? To sell from that point to this point. And that is everything that the SBI entails. We have some other trades that we would have took with this particular SBI entry model. You can see we have one here. Let me show you other ones. Let's use this particular here also. Let's see if we have here. We should. Okay, let's use another one. All right, look at this. For this point, look at this. We have what? We have a sweep of liquidity at this point. We have a break of structure to the upside, and we have my inducement at this point. Remember what I told you, that always we would have an order block or either a breaker block. So for this, we have this full order block at this point. And where do we have our entry? We would have our entry from this point, and we'll look for higher prices. You can take our profits from here. We have a stop loss below that entry. Now let's quickly take a look at other examples of this SBI and you see how it works. Now look at this particular one. We have sweep of liquidity. We have a break of structure at this point. Then we have our inducements at this point. Remember, always an order block or a breaker block. Look at this. This is complete order block. Then you can look to sell from here. And you target what? Lower prices. This is a good one. Ratio 3 is always a good one. And that is all the SBI is talking about. Now look at another example. Quickly look at this point. Look at this point. We have a sweep of liquidity at this point. We have a break of structure at this point. Then we have our inducements at this point. Then where is our entry? We always have our entry at this point. Then we have our position from that point to the upside. Something like this. We target this point and we have our stop loss below that level. And that is how to trade the SBI model. It's very simple. All you have to do is just to practice it properly before putting it on a live trade. So if you are watching this, make sure to subscribe to the SafuLane YouTube channel for more trading videos. Wish you good luck in your trading.